Futures absolutely flying with 30 minutes to go until the start of cash trading. I'm Katie Greifeld.
I'm Sonali Basak. Matt Miller is off today, and Bloomberg Open Interest starts right now.
Coming up, countdown to the Fed. Officials expected to hold rates steady today while signaling a potential cut in September. Meanwhile, tech stocks rebounding despite disappointing earnings from Microsoft. Up next, Meta and Qualcomm report after the bell. And Boeing taps Kelly Ortberg as its next CEO. Of course, he's taking on one of the most complex turnaround challenges in corporate America. Let's get a check on where markets are trading 30 minutes until the cash session. And like I said, futures absolutely soaring right now. The S&P 500 up about 1.3%. Interestingly, it's big tech leading the way. The NASDAQ 100 up more than 2% pre-market, even with that disappointment from Microsoft. And the bond market relatively quiet right now. 10-year yields only down about 3 basis points, Sonali, but of course, that could change at 2 p.m.
Let's take a look, Katie, at some of the stocks moving pre-market here. We were talking about Microsoft Azure cloud computing service posting a slowdown in quarterly growth. You do have Microsoft paring some of its losses, now down about 1.7%. And Boeing keeping an eye on it, up more than 1% pre-market as it appoints, of course, Kelly Ortberg as its next CEO to succeed David Calhoun.
And we also want to take a quick check on NVIDIA because I mentioned that futures are flying. A lot of that has to do with what's going on in NVIDIA, surging 7% pre-market after being renamed as the top U.S. chip stock pick by Morgan Stanley analysts. Let's bring it all together with Bloomberg Technology co-host Ed Ludlow. There's a lot to talk about when it comes to big tech. NVIDIA, of course, soaring right now. But let's actually go back to Microsoft. It reported yesterday a bit disappointing.
Yeah, don't miss street estimates.
Yeah, there you go.
Pretty simple game, isn't it? I mean, I think we've got a dose of truth and reality. The eagle-eyed investor will look at the earnings transcript and the comments from CFO Amy Hood, and she was talking about capital expenditures. So they jumped to 19 billion from 14 in the prior quarter, and she said this is a 15-year time horizon to monetize that capital expenditure. And that's the question that's been for investors, the money machine. I talked about it with you guys all week. For every dollar you're putting in CapEx for infrastructure, how many dollars are coming out on top-line growth? They gave us numbers on top-line growth. It just wasn't enough. It never is, really, is it?
Well, with also what a big client Microsoft is to NVIDIA, you do see NVIDIA on the rise this morning. What can we see ahead for that stock? Yeah,
look, there's the Morgan Stanley top pick call, but I would sort of extrapolate out and by association look at AMD. So AMD modestly boosted its MI300 or AI accelerator forecast to $4.5 billion. You know, NVIDIA will do, what, $100 billion of sales this year? So you either look at it and say AMD's chipping away in a minimal way at the market share, or the gap's maintained, and if AMD is forecasting that the investment cycle will be sustained, great news for NVIDIA that basically controls 99.9% of the market.
And of course, that's been a bit of a problem for the likes of Intel, for example. And we got some reporting yesterday about their turnaround plans. It seems like investors actually cheering that on this morning.
Yeah, remember that the point of difference of Intel is that it has a foundry or fab business it's trying to get off the ground to become a third-party manufacturer. Our sources are saying that thousands of job cuts will come to a company that has still 110,000 headcount globally. But earnings have been really disappointing. And on the product side, in the AI accelerator market, we said NVIDIA 100 billion this year, AMD 4.5 billion. Intel might do 500 million in the second half of this year. So they're not catching up there. The data center and PC markets are difficult. And you know, when I speak to Lisa Su at AMD, I think we'll talk a bit about PC because I'm trying to understand what's going on. It's just not going very well for Intel. That said, I don't know if we have the shares up or not, but investors usually welcome prudence and cost cutting to get yourself out of a hole.
2% pre-market.
Oh, nice.
There you go.
Yep.
Bloomberg Technology's Ed Ludlow. We're moving on from here. Big week of tech, of course. We'll keep an eye on it all with you. But we're also watching BGC Group reporting results yesterday with revenue of more than $550 million and nearly $38 million of net income, adding momentum for a good year for the brokerage company. Shares outpacing the S&P, as you can see. Joining us now is Howard Lutnick, Chairman and CEO of BGC, also Chairman of Cantor Fitzgerald. And let's talk about performance for a second here. BGC, you looked at equities. It was down. Every other business really was on the rise. What was driving performance, and where are you going to be making most of your money from this year?
So BGC, for years, was in the market where there were zero interest rates. And so people sort of forgot about us. We're the world's most valuable wholesaler. So everything in the world that you guys talk about and trade, we're the wholesale market. Like, who does Goldman Sachs trade? Who does JP Morgan call when they want to do their trades? They call BGC. We're the wholesaler. So with interest rates back, our stock was up 90% last year, up 30% this year so far. And our business is on fire. Revenue is up 11.7%, profits up 19.2%. And the most exciting thing, we're launching in September, pretty soon, a competitor to the awesome monopoly, Chicago Mercantile Exchange. They do 100% of futures in America. And now FMX, which is run by the largest wholesaler in the world, we brought in some partners, 10 of the largest banks and trading firms in the world, JP Morgan, Goldman Sachs, Citadel, you name the list, they're all on the list. In September, we bring competition, so I think our stock's going to be fire. Obviously, we're going to try to do a 90% again.
Right.
We got some work to do in the last bunch of months.
Let's talk about that competition because, of course, Terry Duffy of CME has had some words for you both on his earnings call and in the media. And it was actually the first question on your earnings call. Basically, Terry Duffy criticizing you clearing trades through LCH when it comes specifically to treasuries. We know that we've reported that you've struck a deal with LCH rather to basically cross margin with treasuries. Do you foresee any issues there?
No, that's what I found so fascinating. You've got the CEO of the Chicago Mercantile Exchange worth $70 billion, right? With a monopoly, the only exchange doing futures. Now, here we come with our competition, and we are just in his head. Oh my gosh, for him to talk, he said nasty things about me. I mean, imagine saying nasty things about the guy who's going to compete with you.
Well, he says he's not going to sit by and watch you take share. At the end of the day, I think Katie and I are both wondering, have you talked to him about
What's he going to do? Do a dance while I take share? I mean, look, he's got 100% market share. There's no chance we don't take share, and we're going to take serious share because we've got partners of all the big banks, all the big trading firms are our partner. So LCH clears interest rate swaps, right? So dollar-based interest rate swaps. SOFR futures are really a future for swaps. So if you can do both things together, it's really efficient, right? Because you're just basically, it's like stock futures, which you talk about, and stocks, right? They're a good hedge for each other. That's what interest rate swaps and swap futures or SOFR futures are. So we will have amazing cross-margining opportunities, and therefore we're going to bring this competition. And investors have not really understood how exciting that is within BGC's stock. So I think what will happen is we're going to launch in September. We're going to come out strong, but it's a marathon. This is not a sprint. And you know that.
How much volume could you do in year one?
Well, I think year one we're going to do, our goal is to have the world record open interest, meaning trades that are sort of parked at our exchange, where investors are sticking it out with us. They're not just coming and going, they're staying. We expect at the end of the first year, we will have the record for the most open interest ever for a new exchange. And that will bode incredibly well. So that's what I'm looking forward to. That's the ribbon we're going to cut. The most open interest ever for an exchange.
Well, we have that on record, so we'll have to check in with you on that after
year one.
But you mentioned the stock. I want to talk about the stock because I was checking. It's up 89% over the past year. But you pointed out in the earnings call that you only trade at 10 times earnings, and you cited that as a reason why you're buying back the stock. What do you think is a more reasonable valuation?
So we're a member of the S&P 600, which is sort of like the mid-cap stocks. We're not, unfortunately, we've got a long way to go to catch NVIDIA, you know? It's sort of the 3 trillion sort of world. But so, you know, our stock is 11% revenue growth, 10% for the year, right? Just had 11 this quarter, and 19% profit growth. If you compare that to other S&P 600 stocks, they trade at 25 to 30 times. And we're trading at 10 times. And you say, okay, other stocks in the S&P 600. And I'd say, well, those that trade 10 times earnings have 0 revenue growth. So I'm trading like a 0 revenue growth company when we're really 11% top line revenue. And the reason for that is because all those years of 0 interest rates, people sort of forgot what a great company we are. You know, I used to describe us like Gillette. You know, every morning all the men in the earth wake up with a beard, and some of them need to shave. Not me so much, but some need to shave. Bonds always, there's just going to be more issued. If you're in the bond business, I promise you next year, there'll just be more to trade. Good business for you as well.
Speaking of trading, you were bang on when it came to kind of seeing the direction of interest rate cuts this year. You never really thought we were going to get 5 or 6. You said September was when you would see one. Now the market is aligned with what you had said many months ago.
How about that, right? I said it in December. Now the whole world believes they're not going to cut today and they're going to cut September. So they basically were saying, yeah,
what about
Howard
next
says.
year? What about next year? You think about the pace of cuts moving past September, the election coming up. A lot of people are thinking about what it would mean for Trump versus Kamala Harris to take the office, whether those tariff policies will be inflationary going into next year. How much room will there really be to cut rates going into 2025?
I think both candidates, both would like to cut rates. So that's good for the bond business, right? When you have everybody running, you have 100% coverage of people in politics want to cut rates, right? So I think we get a September cut. I think that's in the cards for sure. And you saw Germany had negative growth. I mean, negative growth from such a big economy like that is going to drive all the central bankers who are now looking to cut. All right, so it's really, that's sort of the word out there now, cuts. So September, I think the market's building in a 100% probability of a cut now. How about that? That's a good percentage, 100% is sort of it. I think there'll be some cuts next year, but you have to remember, zero is just not a thing, okay? It was a manufactured thing to get us out of the great financial crisis, right? So it's just, and the pandemic, it's just not a thing. So I think a couple of cuts, maybe. In the mid-4s is a reasonable rate for us to live and breathe in. So I think 2 or 3 cuts next year. I'd say 2 cuts next year, 1 in September. And that's the whole thing. It's not, unfortunately, it's not that exciting. It's not 7 cuts and then 7 hikes and then
all the way
7
back
cuts.
to zero. It's just not happening.
Yeah, no chance. Zero chance. We have a good economy. We have good interest rates. For the Fed, it's their tool, right? If they, at zero, what tool do you have? Right? You can't. What did they do? Quantitative easing. You're like, how is that even on the menu? What, they buy all the bonds of America? But you have to remember, as the Fed runs off its balance sheet, okay, that means I'm not buying bonds, you are. That's tightening. It's like, it's cutting, it's cutting off your credit card. For the economy.
So, if you think about the path forward here, a lot of people are waiting for stability in the markets to finally see more IPOs. Cantor Fitzgerald, big underwriter in the IPO market. What's your expectation for the year ahead? And do you see bigger or smaller companies really coming to fruition here? It's really a market that is hoping for that small cap rebound. So
Cantor's in a really good place. I mean, we're 3rd so far this year, and it's, we're going on, going into August. So we're doing it, we're in a really good spot. Cantor's got a great healthcare franchise. Now, we don't do the big giant companies. We do the smaller companies where we focus on raising them for phase 2 and phase 3 drugs. Sort of one of my favorite days of the year is our healthcare conference because we're not sort of pumping up big companies. This is where all of the new developments in biotech and biopharma present themselves. And it's so fun to see the things that are happening, and we're helping them raise money. So our IPO business is very successful. I think the market 2025, you're going to see the IPO market open, and you're going to be talking about companies. And on this show all day, you're just going to have fire talking about, because there's so much pent up demand. So many companies want to go, right? And as the market starts to crack, which we're feeling now, right? They're going to start coming. You're going to start seeing 3 a week, then you're going to start seeing 4 a week, and next year, by the middle of next year, 5 a week. They're going to be coming hot and heavy, and you guys are going to be awful busy on this show.
Well, that's great news, of course, for the news business. Howard, don't go anywhere. We're going to take a quick break, a quick check on futures and markets right now, because there's a lot of action under the hood. You take a look, of course, at the futures there, but we should also flip up the board and take a look at some of the single stock movers right now, because NVIDIA, of course, really off to the races, up almost 8%. Pre-market, a different story for Microsoft, down 1.6%, but that loss was a lot bigger just a little while ago. Meanwhile, take a look at CrowdStrike, up slightly, and then Boeing there after naming its new CEO, up about 1.4%. This is Bloomberg.
And And now to high interest, a look at what's making headlines around the world today. The Bank of Japan raised its benchmark interest rate to around 25 basis points from a range of 0 to 10 basis points. The central bank also unveiled plans to halve bond purchases, underscoring its determination to normalize monetary policy. The yen has gained against the dollar on the move. And Israel said it assassinated top leaders of Hezbollah in Beirut and Hamas in Tehran, a show of the country's willingness to risk retaliation and an escalation of regional tensions while hunting down enemies abroad. Iran's supreme leader spoke of retaliation, vowing that Israel has prepared the ground for its severe punishment. And in the race for the White House, the presumptive Democratic nominee Kamala Harris has wiped out Republican nominee Donald Trump's swing state lead, according to the latest Bloomberg Morning Consult poll. The vice president overtook the former president in Arizona and Nevada, and she has more than doubled Biden's lead in Michigan, Katie.
And let's stick with politics because we're back now with Howard Lutnick. He is the chairman of Cantor Fitzgerald and also a political donor as well. I know that you're hosting a dinner on August 2nd, basically asking attendees to pay $25,000 to attend, and even more so if they want, of course, a photo.
It's going to be a great
Donald
chicken.
Trump.
It'll be really great chicken for
really
$25.
good chicken, not rubber. But how much are you looking to raise here? Are you trying to set any sort of record here when it comes to fundraising?
I think we'll raise over $10 million for the evening. And I mean, what an honor to have President Trump come over the House. We've got really a great crowd will come. I'll probably keep it to 100 people, so because I don't want it to be too big. And it's really, he gets to talk, he gets to meet, and he hosts a round table. So the biggest donors who pay $250,000 sit at a dining room table and spend a half hour just asking him questions and talking. And you know, he needs money, right? It's a race now. It's a hot race now, and you know, Donald Trump needs the fundraising, and I'm trying to help everywhere I can.
To that end, you actually donated to the 2016 Senate campaign for Kamala Harris. How do you think her entrance into this race changes the game?
Well, putting on me what my wife does is not really fair. So my wife.
It's an interesting
that's a
dinner
balance.
conversation.
You know, there's a good balance.
Yeah,
In every marriage, there's a good balance. But my wife actually has moved over to Donald Trump, which is unusual for her because she says Israel is her number one, policy, her number one issue, and she knows that Donald Trump literally sat down with my wife and told her, I will be the best president for Israel, I will protect Israel and take care of them. So, you know, even in my house, we have unanimity around Donald Trump.
And of course, you have big plans at Cantor Fitzgerald with FMX as well. But if Donald Trump were to win, are you angling for a spot in the administration? Would you serve?
You know, the rules are if the president asks you to serve, you kind of have to say yes. I'd rather help him with transition. You know, I'd rather help make sure they put great people in the administration. I mean, that's the most important thing is you have the people around you are smart and capable. So I'm going to offer to help him there. But if he asks, you got to do what the president asks you to do. I'm in love with running Cantor Fitzgerald and BGC, though. I just want to be crystal clear.
Right.
I love what I do.
I want a little story time. How did your relationship with Donald Trump develop, and how did you become such kind of a critical part of this fundraising effort?
Well, I've known him for 30 years. I mean, when you're in New York, I've known him for 30 years. If you go back and look at the first season of Celebrity Apprentice, I was a guest appearance.
Oh,
right? So, I mean, I've known him a long time. This isn't like politics, right? I've known him a long time. He's extraordinary. I went with him to a Minnesota rally, okay? And, you know, I didn't know what to expect. I've never been to a rally with him. It's like going to Mick Jagger to a rock concert. They're lining the streets, thousands of people lining the streets, 15,000 people in the arena, and 25,000 outside watching on a Jumbotron. And you just can't understand what that feels like. And then when you see it, you're like, holy moly. So they let me introduce J.D. Vance. So I walked out in this rally, right? And they're cheering. It was a rock concert. I felt like a guy like me doesn't usually feel like a rock concert sort of guy. But
Howard, do you worry about some of the comments that J.D. Vance has been making lately about childless women and what it could mean for Trump's campaign?
I think the vice president quickly moves to behind the president. You know, lots of things people talk about. They try to make the vice president something, but the vice president's job is to strongly support the president of the United States. That's their job.
So are you not then concerned about the speech he gave at the RNC, for example, which was very anti-Wall Street?
Well, I think he wants to bring, he wants the common people, right, the people on his neighborhood where he grew up, to feel that they've got a voice in the White House, which I think is really important, right? And I think it will resonate with the people on Main Street. But the fact is, the only policy that's going to matter is by the President of the United States for both parties. Whoever they pick is a good running mate, is a smart person. They're a heartbeat away from the Oval Office, as we know, but, I mean, and Kamala was closer than most people.
That's true.
What's the Trump trade, in your view, as somebody who knows him?
I think the Trump trade is a broadening of the base, right? So what we've seen is this rally has been the Magnificent Seven, right? He's going to cut corporate taxes, which is a broad base move. He's going to cut regulation, which is a broad-based move, and he's probably going to put on tariffs on China, which isn't good for the Magnificent Seven. So I think what you've got is a constraining of the Magnificent Seven and a pounding up of the rest of the market. So I think if you were going to do a trade, it would be long the broad base, right, against the Magnificent Seven, which is sort of the opposite of what we felt for the past year.
So Howard, somehow we only have a minute left with you. You were with Donald Trump in Minnesota. You were also with him in Nashville at that Bitcoin conference where you announced that Cantor Fitzgerald announced a new multi-billion-dollar effort in Bitcoin financing. Can you give us any details on what the potential timeline for that is?
Sure. So, you know, securities markets, everybody finances securities, and nobody finances Bitcoin. Bitcoin market cap is over $1.3 trillion. So we've figured out how to do it, how to custodian it. We'll work with other custodians, but they're going to have to work with us because we have to control the Bitcoin. Can't let it get hacked. And we're going to start lending on Bitcoin. We're going to start with $2 billion of loans, and then we're going to go up in increments of $2 billion. So it'll be a huge business because it's a huge asset. And it's only Bitcoin. We're only focused on Bitcoin. But Cantor Fitzgerald will be financing Bitcoin. And I think it's a fun business. And it's a big asset class, but it's more like a commodity. People talk about it like it's a currency. You can't buy bread with something that goes up and down. So I think of it as a commodity.
Howard, I got a producer in my ear. We have to have you back very soon, maybe in September. Our thanks, of course, to Howard Lutnick. He is chairman of Cantor Fitzgerald. This is Bloomberg. This is Bloomberg Open Interest. Let's take a quick check on futures right now because they are solidly higher and then some. The S&P 500 up 1.3%, even more so if you take a look at big tech, 2.2% higher before the bell, and even the small caps joining in on the fun. Now, coming up, we speak with State Street's Maria Waitman on her call to buy the dip in tech. That's next. This is Bloomberg. All right, we are just moments away from the start of trading. This is Bloomberg Open Interest, and I'm Katie Greifeld. Of course, it's a big day. It's Fed Day in the middle of what is an enormous earnings week, and you take a look at what that means for the pre-mark. The S&P 500 up 1.3%, even more so if you take a look at big tech, up about 2.3%. The bells are ringing. We have BlackBerry, we have Armada as well. Of course, ringing those opening bells on NASDAQ, on the NYSE. Take a look at where markets are trading. Just, of course, a few seconds into the trading day. Of course, we have a lot to look forward to, the Fed being one of those just events. But you can see the S&P 500 really rallying right now. The NASDAQ 100, that's going to refresh. You can see 2.3%. The Russell 2000, again, it's not exactly leading, but it's not falling either. The Russell 2000 up about 0.6%. But one stock to keep an eye on at the open, that is Starbucks. The coffee chain delivered results that were in line with expectations, easing fears of another meltdown. You can see a little bit of a relief rally underway. Sonali shares currently up about 6.5%.
Also, Katie, keeping an eye here on Boeing, up about 1.5% at the open. Kelly Ortberg has been appointed as the new CEO to succeed David Calhoun. Of course, this has been a long-awaited move, that CEO search. Also watching shares of Microsoft. Remember, Azure growth disappointed investors. Now Microsoft down about 0.7%. AMD, though, soaring, up more than 9%. It's rising as AI is boosting the chip maker's revenue forecast We're going to get a closer look at Microsoft and AMD with Bloomberg's Abigail Doolittle.
Absolutely, Sonali. These are, of course, the two big movers on the morning relative to tech. So here's another look, and we're putting, in this case, AMD on top, 8%, a nice move higher after the company basically on the surface an inline quarter. But folks really liking the sales outlook, that revenue outlook on AI chip demand. In addition, in the month of July alone into today, the stock had been down 15%, so a bit of a relief rally. Not so much for Microsoft, down 1%, and also similar to AMD on the surface, basically a clean quarter. But beneath the surface, that Azure growth, as Sonali was just talking about, disappointing to some degree, down 29% sequentially as opposed to being up 31% in the quarter before. Returning back to AMD, though, this is something else that investors like, the fact that we do have sequential growth on the top line, 8.9%, certainly better than the first quarter, a little bit later than the fourth quarter, but the fourth quarters are typically kind of light, and on a year-over-year basis, big growth. Let's bring it home, though, with Microsoft, Katie, and put Microsoft into the context of Apple. And, of course, NVIDIA as a stock. We'll be taking a look later, next hour, in terms of the big rally. But despite that, let's put NVIDIA into the context of Microsoft and Apple. Apple is clearly, in white, the world's most valuable company, a market cap of $3.355 trillion. Microsoft falling away, but still in the $3 trillion club. And then take a look at NVIDIA, all the way there, down there, $2.6 trillion, as that too far, too fast rally is fading, at least right now, although on the day, a bit of a rebound.
Oh, big time. Of course, NVIDIA really surging right now, propping up the whole market as well. Abigail Doolittle, thank you so much. And joining us now for more, I'm pleased to say we have Maria Waitman. She is head of equity research at State Street Global Market. Great to have you back with us. And you had the punchy call actually earlier in the week to buy the dip in tech. We did see Microsoft disappoint, but turns out you probably feel pretty vindicated right now.
Oh, yes, thank you very much, very kind. I mean, our view on tech is that it's still, despite, some slight hesitation in earnings, it's still by far the best earnings there are. I mean, if you look at what company, like consumer companies are telling us, airlines, energy, materials, they all talk about kind of weaker guidance, price inability to increase prices, margin pressure, and tech. Okay, it's growing. I mean, we splitting difference 29-30% or 31. So there is still quite strong earnings growth in technology stocks. So that's really kind of how we see market.
And Maria, if you take a look at the expectations, of course, when it comes to the Federal Reserve, how much is the dot plot going to matter when you think about forward discounted cash flows here? Until now, there has been that expectation for that September rate cut, but how sensitive is the market to the forward look when it comes to the valuations in these names?
Yeah, no, absolutely. That's a really important point. And I guess today's market is not expecting much to happen today, and it's all about guidance for September, for year end, how many cuts we are going to get. And market is very confident that we'll see start of the cutting cycle in September, and that's great for the kind of overall market for kind of every stock. And then we have to kind of debate whether it's this kind of the great rotation in small cap can potentially happen or not. And as I said, our view is that for the rotation into small cap to happen, you need to see broadening of earnings. And given what companies are telling us, where the kind of overall guidance is, it's not broadening. Majority of earnings remain in technology stocks, and that for us means that tech will continue to lead the market.
That's really interesting there, of course, when you think about the overall market, as you call it. Sounds like you're saying that, of course, earnings aren't going to be the catalyst for that broadening out. Do you think that the Fed alone, if we did get maybe more rate cuts than expected, would that be enough to juice small caps, even if earnings continue to be a little bit soggy here?
No, I think I'll be skeptical. I mean, for us, you need to kind of three conditions to happen for the rotation into small cap. One is positioning, and it's very clear that market is very crowded in technology stocks, and arguably that's potentially why we're seeing some weakness. And I mean, interestingly, if we look at investor behavior ahead of corporate earnings, I think for the last 4 or 5 quarters, we've seen the kind of exactly the same picture, is that tech sells into earnings ahead of earnings season as position is very crowded. And then when technology companies kind of deliver earnings, we see some softness in the rest of the market. Then market goes back to technology stocks, as that's kind of the large cap quality. Quality game it remains important as earnings, as you say, remain overall soggy. So that's kind of the game plan we are following. So a little bit of softness in tech ahead of earnings.
Maria,
wait for results. Hopefully they deliver, and yeah.
You still look at a market here that has more than 3 rate cuts priced in through the end of January. And if you don't see those 3 rate cuts at least materialize, what else starts to break in this market as interest rates stay high, start to break into those companies that are still relying on a lot of leverage at these high interest rates, on consumers that are levered up as well?
Yeah, no, I would definitely agree with that. We're seeing quite a lot of stress for smaller companies, quite a lot of stress for lower income consumer, and that's where the pressure is. And mind you, the rate cuts exactly the same as we talked about rate hikes. They work with long and variable lag. So even if Fed cuts and delivers those 3 cuts that market is kind of expecting before January, it's still not clear that will have the kind of real economic impact and kind of ability to service those debts that are getting more and more expensive for certain groups of the market. So yes, financial markets will get very excited, but in terms of debt servicing costs, we are going to see those kind of stresses for certain parts of the market to continue. So that's, I mean, rate cut is not a silver bullet, really, when we've been at fairly high interest rate for some time.
And I want to talk a little bit more about the concept of broadening out, because we were talking about it really in terms of size, large cap to small cap. But if you stay within the small cap space, I mean, do you see any sectors, industries beyond tech, of course, that are worth venturing into right now?
One place that kind of getting increasingly interesting is healthcare. So that's one sector where investor positioning is particularly light, and the sector still has a decent cash flow. So that's important, and that's important to us. Margin pressure is maybe less challenging. So I think healthcare probably quite an interesting sector. Again, defensive sector that fits with kind of our overall strategies that economic slowdown is coming.
So what's the trade here, Maria? At the end of the day, do you take money out of certain more profitable bets that you've been making? Do you take money out of cash? Where do you get that dry powder from, and where do you deploy it?
I mean, we've been in this cash plus tech barbell for quite a while. I think that still makes sense to us. Yes, tech has suffered a little bit recently, but as I said, that to us is a buying opportunity, because it still is likely to maintain its leadership as earnings picture is so much better than anywhere else.
Maria, thank you so very much. That is Maria Vaitman of State Street. Now coming up, a new CEO at Boeing. We've been talking about it. They have some headwinds to navigate over there. We're going to have details on that next. Stick with us. This is Bloomberg. Hi, Georgia, Sonali, and Katie. How are you?
Good. How you doing today?
We knew this week would be busy, but the moment is here. Do you know much about this new CEO?
Not a lot. I mean, I've seen his background, see that he reemerged from retirement. To me, it feels like another caretaker CEO. He has a nice resume, but again, coming out of retirement, 64. What's the runway for him at Boeing? I don't know, 3 years, 5 years?
That's what I was thinking. Like, is this a transitional sort of thing? Like, they need to put someone in place. This guy's great, but maybe the search continues.
It is. I think that either that, or they want some time to, develop some of the people internal in Boeing, right? the head of commercial airplanes. She's been rumored as the potential CEO. She doesn't have good, I think, manufacturing skill set, so maybe this gives her some time to develop. So it may be some of that. There's a lot of risk in that job right now. So
right.
If you were hitting your stride somewhere else, I don't know that you'd want the job at Boeing.
And it's funny that Calhoun is staying on until like a special advisor until next March. Wonder what advice he's going to offer.
Yeah, I think you kind of need that, right, for continuity, but
yeah.
Because the person's coming again out of retirement into a job that's very complex. I'm sure they don't have a full handle on it, so we'll see. It was interesting.
We'll see. A lot to talk about.
Yeah, exactly. Stephanie Pope is the one internal that they're, I think, developing.
Maybe more single stocks.
Yeah.
I do a market check before top calls?
I think we should look at Starbucks as well.
Yeah.
Let me see what.
Starbucks. What's going on at Starbucks?
Soarin'.
They're on the rise.
Better than feared.
Good news-ish, sort of.
It wasn't awful.
This is Bloomberg Open Interest. I'm Abigail Doolittle in the principal room. Coming up, an interview with Ben Goodwin, CEO of Olipop, at 10:30 a.m. Eastern. This is Bloomberg.
This is Bloomberg Open Interest. We're going to take a quick check on stocks. It is a green day today. We are watching the S&P 500 rise to the tune of 1.3%. Even bigger gains in that big tech index. NASDAQ 100 up 2.3%. Russell 2000 getting a bid, but not as much, only up about 0.25%, Katie.
All right, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, TD Cowen downgrading McDonald's to hold and says the shares will be range-bound for the foreseeable future. The analyst also saying that the burger giant has a tall hill to climb when it comes to improving its value perceptions versus its peers. Next up, Morgan Stanley renaming NVIDIA as its top U.S. chip stock pick for the first time in 6 months. The analysts over there say that the recent sell-off provides a good entry point, and you can see people taking them up on that view right now. Shares up 9.3%. And finally, we have Bernstein raising its rating on PayPal to outperform. The payments company boosted its forecast for profit and also increased its buyback plan. The analyst sees PayPal having steady beats and raises over the coming quarters. Sonali.
And one stock to watch here at the open, of course, it's Boeing. Shares are higher on the news that Kelly Ortberg will succeed Dave Calhoun as CEO. Bloomberg Intelligence senior analyst George Ferguson is here with more. And George, my major question to you is, when you think about the CEO, the next CEO of Boeing, does Kelly Ortberg fit the bill?
It seems, unfortunately, that we lost George. And I mean, that's the question that basically everyone is asking. I think when you think about what this new CEO has in front of them, both really reaffirming that these planes are safe and also sort of recovering that reputational damage that they took on with all the different incidents, it's a tall order, obviously.
The market likes it so far, if you see the stock reaction here. Of course, it adds a lot of certainty here to the story of Boeing. We're going to go back here to George Ferguson. We have got him back. George, busy week for you over here, and you see the market reacting well. We still do not have George with us, but we are going to talk more about this story here, because interesting to see a lift here in the stock for Boeing, 1.7% higher. But of course, this is a stock that has taken a lot of pain this year, especially when you think about the oversupply problem, Katie, in the market.
It's also interesting that Ortberg, he's 64 years old, so he's not exactly new to this company, coming out of retirement to do this. You have to wonder what the plan is. Hopefully we get George back to talk about all of it. This is Bloomberg. This is Bloomberg Open Interest. Let's take a look at the stock market. About 20 minutes into the trading day, boy, it is green across that screen. You can see the S&P 500 up by more than 1%. Even more so if you take a look at the NASDAQ 100. Your big tech names up 2.2%. Overall, small caps, they're doing okay, up about 0.2% on the Russell 2000. But as promised, we are going to talk about Boeing, of course, naming a new CEO. We had been awaiting that. Let's bring in Bloomberg Intelligence senior analyst George Ferguson. George, I hope we really have you because I really want to talk, of course, about Kelly Ortberg. What do we know about him?
So, we know about his career in the industry. He's with suppliers, Collins, helped merge them into RTX. We know he was in retirement as of 2021, coming out to take the job. Engineer, I guess he spent some time at Texas Instruments, but he's been sort of off the radar here for sort of 3 years or so. I was a bit surprised by the call, but I don't know. To me, it feels a little bit like a caretaker CEO again, right? So we have somebody, I think, that's about 64 years old. Can't imagine they've got a long runway for Boeing. I think it's indicative of some of the challenges of finding a CEO for this company that's in really some difficult straits right now.
George, can you speak a little bit to the challenges that will lie ahead for Kelly Ortberg?
Yeah, I mean, when I look at his experience, right, it's with smaller component manufacturers. If you think about Boeing is a big systems integrator, right? You bring in your parts from all around the globe and you turn them into airplanes in the factory. And so to me, that feels a little bit like a different skill set. And that's been the challenge here at Boeing, is sort of bringing all those components in and turning them into airplanes with top-notch quality. So I think that obviously that's number one, is stabilizing the manufacturing. But we saw Boeing during the quarter, they burned another $4.3 billion of cash after CapEx. So they now have about $13 billion on the balance sheet. They're starting to get dangerously low. They may have to come to the capital markets to raise money if they keep burning cash like this. And so what they really need is a ramp up of builds for the commercial product in the second half. It needs to be strong. It needs to be soon, or they'll be back in capital markets. And so we're looking for Kelly really to get motivated on that. And then on the way to doing that, he's going to start by talking to the machinists union that wants a pay increase. Their contract expires in September. They want a 40% pay increase. So he's going to go right into the deep end immediately.
Yeah, absolutely. You think about the labor challenges there as well. But it's a good reminder that we did see Boeing actually report earnings today, second quarter, missing estimates on revenue. We also heard from its main competitor, Airbus, earlier in the week. And a lot of analysts called out the positive surprises for Airbus. I mean, when it comes to this real duopoly between Airbus and Boeing, how does the competitive landscape stack up between the two right now?
Yeah, look, they're both struggling right now with supply chain. Boeing's struggling a lot more, but Airbus is just not getting the throughput they want. They've had to push back some of their larger increases in production out to out to 2027. They like to give us long horizons on build rate. They talked about problems that, with LEAP engine deliveries, which come out of GE and Safran, which I thought was doing a relatively good job of getting their engines built compared to their competitor RTX Pratt & Whitney. So look, the duopoly is, when one thing affects one of the duopoly, you can usually count on it affecting both. And so nobody's really getting, I think, a firm sort of leg up here because of these supply chain challenges. But Airbus is operating, I think, a lot smoother than Boeing is right now.
George, really curious here. I also just want to nod to this kind of $500 million cost that Delta has also said this morning that they would be incurring tied to the CrowdStrike outage.
Yes.
What does that number strike you as?
It's large. $500 million is large. I think Delta, look, they're hiring attorneys to go out after CrowdStrike, so you'd expect the number to be big, when they bring it into the marketplace. I'm sure Ed Bastian very upset because Delta had generally done a pretty good job of operations, but if you look at the industry, we see operational problems around it over time. American had this spate of problems. Then we saw Southwest had this spate of problems. Now they've landed on Delta because CrowdStrike was probably too embedded in some of their, some of their systems. it's challenging to always be proofing your supply chains, making sure there's no chinks in the armor. In this one, he had one. I think again, Ed Bastian, very disappointed. I think took a bit of a beating with his customers over this, and coming out with a big number to show he's very upset.
George Ferguson, we thank you so very much for your time. That is Bloomberg Intelligence's airline analyst. Now it's time for the Wall Street Beat. We're talking about Ares today, setting a new record by raising over $34 billion for its latest direct lending fund. Of course, that number includes leverage. Joining us now is Bloomberg private equity reporter Allison McNeely. That $34 billion number that they've compiled, we're talking about the capital base that they're putting together for new deals and lower middle market, upper middle market. How does this number compare to what's been going on out there right now?
Well, it's really a continuation of a theme we've seen in the race into private credit. It's a new record. Ares raised about $15 billion worth of equity commitments. When you add leverage and separately managed accounts, that gets you to that record $34 billion figure. By comparison, Goldman Sachs gathered about $20 billion a couple months ago. And so we're seeing, players raise ever larger funds as they look to essentially step in for the banks, which have pulled back from middle market lending, and make some money doing it.
So $34 billion, that's a lot of money. Are there enough deployment opportunities? I mean, are there any concerns about that?
That's a really good question. So Ares' first quarter results actually came in a little bit light a couple of months ago because of more muted M&A activity. Therefore, there were fewer deployment opportunities, fewer opportunities to lend. So that's a really big question that's kind of looming over all of private credit right now, but particularly sort of direct lending middle market loans. Are we going to see that pick up in deal making activity that presents opportunities to lend money?
Allison, I would love to also talk about KKR results here for a minute while we're sticking on private markets, because you are having KKR shares hit a record high right now. Profit is improving. What are they showing and putting up on the board here?
So KKR has been talking a lot over the past couple of months about the improving picture for regular way private equity deal making. They reported a soaring profit in the second quarter, for up 49% on a key metric, because they sold more assets than people largely expected them to. AppLovin share sale was one deal. A sale of their stake in the ADNOC pipeline network was another. And they say there's more of that to come. And the deal making environment for private equity is improving.
All right, Allison McNeely, great scoop. Really appreciate you sharing some of your reporting with us. And we do have to get to some breaking news right now. Uber and Lyft, the NYC taxi regulator, agrees to not impose those new rules on both of those rideshare companies. You can see stocks rising right now in response. Uber up 2%, Lyft up 1.8%, now 2%. Let me just read that headline one more time, that the NYC taxi regulator agrees not to impose those new rules on Uber and Lyft. You can see the relief rally right now. We'll continue to follow that story, of course, and markets on this very, very busy day, because coming up in the next hour, we have former Federal Reserve economist Claudia Sahm. We'll speak to her about what she's expecting and why she thinks that the Fed should cut interest rates. That's next. This is Bloomberg. All right, we are 30 minutes into the trading day on this Fed day. Welcome to Bloomberg Open Interest. I'm Katie Greifeld.
And I'm Sonali Basak. Matt Miller is off today. And coming up, countdown to the Fed. Officials are expected to hold rates today while signaling a potential cut in September. And tech stocks are rebounding despite disappointing earnings from Microsoft. Up next, Meta and Qualcomm report. And geopolitical risks are rising as Israel's twin strikes in Tehran and Beirut ratchet up tensions.
All right, let's get a check on these markets. About 30 minutes into the trading day, you can see we have a rally on our hands. We have the S&P 500 up about 1.3%. Of course, we have big moves in NVIDIA that's helping the S&P 500. It's also helping the NASDAQ 100, your big tech index, up 2.4%. Of course, we are in the thick of tech earnings, some big ones coming after the bell today, so keep an eye on that one. Also, the bond market, the 10-year yield. We have a rally underway, down 4 basis points. We are getting closer to 4%. Of course, it'll be fascinating to see what happens at 2 p.m., Sonali.
And we are getting ready for that Fed rate decision, of course, out at 2 p.m. this afternoon. Mckee, Bloomberg's chief international economics and policy correspondent, joins us now from Washington. Mike, what are you expecting?
Well, we're not expecting the Fed to move, but we've certainly gotten data today that, for the most part, pushes the Fed in that direction. We just got pending home sales for the month of June, and it's the largest rise in pending home sales, 4.8%, since the month of December last year. But the other data coming in today, employment cost index comes in cooler than anticipated and down from last quarter, 0.9%. Wages and salaries up just 4.2%. That's what the Fed wants to see. ADP, to the extent you trust it, is 122,000 jobs created in July, and that is the weakest in some time. Also January. I would point out that non-farm payrolls, the private payrolls number, is expected to create only 141,000 jobs this time. That's what your comparison with ADP would be. So we are looking for a little bit weaker job growth. If unemployment goes up, though, that might trigger the Sahm rule. There are 3 things to look for here today because we only get the statement. Don't get a dot plot, don't get an SEP. The characterization of the economy as strong and unemployment remaining low. Are they starting to realize unemployment's going up? Inflation, they say, has eased and there has been modest further progress. Do they say there's been significant further progress? That would be a hint to September. And then the forward guidance is going to be the most important thing, this idea that they will not reduce the target range until they've gained greater confidence inflation's moving to target. That would have to change if they're going to suggest a September rate cut. The Fed would be following the Bank of Japan in moving rates. Bank of Japan raised interest rates for the first time in years, just to a 0.25 percentage point. But that has had a major impact on dollar yen. Yen has strengthened significantly over the last day, and we would anticipate that would continue if the Fed gives a strong signal today. So look to the yen at 2 p.m. when we get that Fed decision.
Yeah, absolutely. And the yen right now, 2% stronger against the dollar. Mckee in Washington. We'll let you get ready for the big dance. But Mike brought up the Sahm rule, and I'm pleased to say that we're joined now by Claudia Sahm. She is a former Fed economist who's now chief economist over at New Century Advisors. Of course, she developed the Sahm rule for dating the beginning of recessions. And Claudia, when you look at your rule, what does it tell you about what the Fed should do today?
There are clear risks. There is cooling, maybe in some pockets weakening in the labor market. We do still have a strong labor market, by and large. For the Fed in particular, they need to recognize that the risk around inflation and around employment are now balanced. The chances of the higher unemployment are balanced on par with the chances of higher inflation. That's another piece of the statement that I'll be watching, because you just want them to be attuned to that, the risk factors.
What does this mean, Claudia, about the pace of decreases that you might see from the Fed? People will be equally looking out for the dot plot. There are many prominent economists that are saying the Fed is very dangerously close to triggering the Sahm rule and getting into that recession zone.
The Federal Reserve should be responding to the fact that inflation has begun its normalization. It's far on the path to 2%, and that's their job. That's the problem right now. Inflation is too high. We are getting there. The Fed needs to start stepping aside gradually and begin cutting rates. By waiting, particularly saying, well, there's no urgency right now to cut. The Sahm rule hasn't triggered. The unemployment rate is still low. We've still got growth. Okay, that is all true. Monetary policy that is done because it is urgent is badly done monetary policy. When we get to a recession, the Fed's tools, big interest rate cuts, which would be disruptive, they take time to work through to the real economy. Like the recession in to some extent, the damage is done if the Fed waits until it gets really bad to start cutting rates. And there's no reason to wait. They have a very strong, credible case on the inflation data, the inflation outlook, to say it's time.
Right.
Just gradually.
Well, Claudia, to that point that they should be proactive, not reactive, and they should begin cutting rates, should they start today? And will they, in your view?
Today is a real missed opportunity for the Fed. They have a very credible case. They have an opportunity to really shift us from hyper data point dependence to, hey, here's some data. Look, rents are easing. Here's the outlook. Look at consumer behavior. Look at the beige. But like, they could really open it up today and get us off of this looking at the last little CPI prints. So just like that's everything hangs on. They're not going to do that today. They have put this all on, we need to be confident, more confident. Right? This is not about basis points. This is about some psychological baggage of monetary policy at the Fed, right? Like this, they've made this into a very big shift. And honestly, that's not the way to approach this very disrupted economy. It is so much better to begin a gradual process of figuring out what's normal on the other side of this for the interest rates. And by waiting and waiting, the risks are bigger that this unwinds very disruptively, and today they are still in the place of doing communication policy instead of rate policy, and we could see that cause some real problems this afternoon because communication is tough between the Fed and the markets.
Well, Claudia, so it's July 31st. After this, of course, the September meeting is September 18th. If they wait until September 18th to cut rates, that month and a half or so, do you think that we'll see the risks then? Is that enough time to potentially see some trouble there? Or do you think that, a month and a half isn't going to make that much of a difference?
We've seen the economy on a cooling trajectory, right? We're still in a place of strength. A lot of this cooling has been necessary. Right, we're normalized. We're getting out of this very disrupted 4 years post-pandemic. What we haven't seen up to this point is something to level us out, kind of go into the growth path. The Fed has a tool by taking some pressure off with interest rates. They are a lever that could help level things out. So what is it that levels us out and puts us on the growth path if the Fed has tied its hands and is waiting? That's a good question. So I think the risks do build. Does that mean in September we'll look back and know for sure, oh, it was a mistake not to cut in July? Probably not. But will we look back 6 months from now, 9 months from now, and say that was the missed opportunity? That's what I'm much more concerned about.
When you look at the signs of weakness that are starting to show up in the economy, Claudia, I want to recognize that this week is a very challenging week for economists, for the Fed, and for traders, given that you not only have the Fed today, you have jobs report on Friday as well. When you think about the direction of the labor market going forward, how much of a risk is there that things start to drop off more meaningfully?
We are not standing on the edge of the cliff, right? So there's a lot of discussion about the recession indicators like the Sahm rule that potentially, if the unemployment rate ticks up again, would trigger. Normally in the past, that has been, basically in the past 4 decades and decades, would have been consistent with early in a recession. Do I think on Friday that we are early in a recession if it ticks up? No. I think there are just a lot of reasons for economists. You said it's a challenging time. Just trying to measure what's going on is really tough. Our indicators in the past, they're probably overdoing some of these signals for lots of different reasons. And yet, the fact that the unemployment rate has drifted up as much as it has is a real concern because there is a dynamic in the economy. Once things start going south, if they pick up enough momentum, that's where they keep going. And then we're not like 100 basis points on the federal funds rate. It doesn't stop that, right? Like this is, so it's something to take very, very seriously.
And Claudia, we have about a minute or so left with you. I have to ask you about politics because you look into next year, of course. If we do get Trump 2.0, there's a lot of concern that what we could get on tariff policy, on tax policy, that it could spur a tick up in inflation, if you want to call it that. I mean, how are you thinking about that when you think about the future of Fed policy and them trying to basically make policy in that environment?
Right. Fed policy is never going to get easier, right? Every step on the road, there's going to be something new that they will have to deal with. I think it's important to really focus on it, and I have heard Jay Powell say this, focus on what is ahead of them, right in front of them, and deal with that, right? Don't complicate it by thinking about, well, what is it next year and with tariff policy? The Fed has had this discussion of, oh, we don't want to cut rates too soon and then have to raise them. It'd be such a big policy mistake. Look, monetary policy has to evolve to a changing world. Like, if you would have a fundamental change in macroeconomic policy that affects inflation, the Fed will have to adapt to it, right? And they shouldn't be trying to front run it, and they shouldn't be, denying the current reality to worry about all of these, possible cases in the future. So it's something for them to be aware of. It is not something that should be featuring heavily in, do we reduce interest rates here in July or in September or whenever?
Claudia, we have to leave it there. That is, of course, Claudia Sahm of New Century Advisors and the woman, of course, behind the very highly watched Sahm rule. And our special coverage of the Fed decision begins today at 1:30 p.m. Eastern. Do not miss it. Now let's get a look at the stocks moving this hour. A lot of earnings under the surface. Here's Abigail Doolittle. Abby.
Lots of earnings indeed, Sonali. Let's start off with the shares of Boeing. They're up about 1% at this point. Now, it's interesting because, of course, they missed the second quarter revenue estimate slightly. They also posted a loss of $1.4 billion, a little greater than that. But the news of a new CEO, Kelly Ortberg, taking over for Dave Calhoun, well, investors seem to be looking at the results and looking forward to the future and the idea that maybe things can turn around for this beleaguered airplane maker. Let's take a look at the shares of Humana all over the map. Earlier today, up significantly, I think up 8%, now down sharply, down 6.3%. They put up a huge beat, 19% adjusted earnings beat. They also beat sales by 3.7%. But what folks don't like is color from the earnings call, the management talking about the idea that hospital admissions could be higher and that patients may be staying longer in hospitals. That, of course, will mean that they will have a greater cost. And then finally, rounding out the picture, Starbucks, it's less bad than feared. The stock is up 3.5%. Katie, as you know, they basically put up an inline quarter, but the fact that into this quarterly report, the stock down 20% year to date, lots of concerns about growth in various geography and too many stores. Well, the fact that they just made the numbers has the stock up about 3.5%.
Yeah, a little bit of a relief rally underway in Starbucks. Abigail Doolittle, thank you so much. Now, coming up, Donald Trump's lead in swing states has evaporated since Kamala Harris entered the presidential race. More on the new Bloomberg Morning Consult poll next. This is Bloomberg.
And now to high interest, a look at what's making headlines around the world. Inflation in Europe unexpectedly quickened, with consumer prices rising 2.6% in July year on year, and that's up from 2.5% in the previous month. The report may make the ECB warier about cutting interest rates further in September after an initial cut to the rate in June. And Israel said it assassinated top leaders of Hezbollah in Beirut and Hamas in Tehran, a show of the country's willingness to risk retaliation and an escalation of regional tensions while hunting down enemies abroad. Iran's supreme leader spoke of retaliation, vowing that Israel has prepared the ground for its severe punishment. And over in the United States, the race for the White House, the presumptive Democratic nominee Kamala Harris has wiped out Republican nominee Donald Trump's swing state lead, according to the latest Bloomberg Morning Consult poll. The vice president overtook the former president in Arizona and Nevada, and she has more than doubled Biden's lead in Michigan. Kate.
And for more on the latest in both domestic and global politics, I'm pleased to say we're joined now by Bloomberg's Wendy Benjaminson in Washington. She spearheaded the Bloomberg News Morning Consult poll. And here with us in studio in New York is Bloomberg's senior editor, Bobby Ghosh. And Wendy, I'll start with you because this poll definitely surprising here. This momentum behind Harris really showing up in the numbers, but still, it's a dead heat right now.
It is a dead heat, and it's, right now the momentum is all in her favor. It sort of wiped out the momentum that Donald Trump was feeling partly while the Democratic Party was in this internal battle about whether Biden should continue the campaign, and then the sort of glorious moment he had after he survived the assassination attempt with that famous photo, and it all looked like it was going his way, and then Kamala Harris steps in, and the momentum has just shifted entirely, particularly with the voters that Biden was losing tremendously, black voters, Hispanic voters, and young voters. All of those people told us in our poll that they were much more motivated to vote in November now that Kamala Harris is at the top of the Democratic ticket.
Wendy, how do you think about the pivot points between now to the Democratic National Convention? You think about the money raised over the last week by Kamala Harris. You think about the polls, as we were discussing. You think about the upcoming fundraisers for Donald Trump. We just had Howard Lutnick say that he's trying to raise $10 million this weekend alone. So what comes next for the two of them?
Well, it's really game on now. I mean, we really have a campaign that, that everyone has been sort of waiting to have happen. And we only have, I think, 98 or 97 days left. So, yes, Howard Lutnick out in the Hamptons this weekend is holding a fundraiser for Donald Trump. We reported yesterday that Ken Griffin was raising a lot of money for Donald Trump. And yet, on the other side, you have, that biggest Zoom call ever with women raising money for Kamala Harris. She raised $200 million in a week. That is unprecedented, especially with 66% of those donors being first-time contributors to a political campaign, which suggests a grassroots support, which counters the billionaire support that Donald Trump is getting.
And of course, this conversation is happening against the backdrop of increasingly fraught geopolitical tensions. And Bobby, I'll turn to you on this because we saw twin strikes from Israel overnight, of course, retaliating against that attack last weekend that killed about a dozen young people. It seems like this retaliation, though, was a bit more extreme than had been expected.
Well, the taking out of the Hamas political leader in Tehran, I don't think is connected to last week's events. Hania has been a target for Israel for a very long time. Israel has said unambiguously that all senior leaders of Hamas are legitimate targets, whether they represent the political side or the military side of that organization. It was a matter of opportunity, and it's quite striking that they should have found this opportunity and taken it in Tehran. I mean, Hania had gone to attend the swearing-in of the new president of Iran. A huge embarrassment for Tehran, a huge intelligence failure on their part. But it throws the whole region into even greater turmoil than it was, 10 hours ago, 15 hours ago.
So, big picture, what does this mean for the escalation of the conflict, and what do you look for next?
Well, so we are now deep into the unknowns in this region. I've been covering this region for 25 years. I've never seen a situation like this. All the traditional rules of engagement, unwritten rules of engagement that govern Israel and Hezbollah, Israel and Iran, those are all have been out the window for some time now. The last time Israel mounted a major strike against an Iranian target was in Syria. This was in April. Iran responded by doing something it had never done before, which is fired off missiles and drones directly at Israel, 300 of them. That was a big, big event, and a big Rubicon was crossed that day. So the risk of escalation now from that point is even greater. So everything, it's a horrible cliche, but it's absolutely true. Everything is on a hair trigger's edge. In the middle of all this, there is Gaza, and hopes for any kind of ceasefire there now are certainly, if not dashed permanently, then they're certainly pushed way out. Because this man who was killed was crucial in those negotiations for a ceasefire, which means more and more Gazans are going to suffer death and destruction and suffering that we've seen. It also means possibly that the Israeli hostages that remain in Hamas's hands are going to face an extended period of remaining hostages. So this is very, very destabilizing, even though it might be that Israel feels it has achieved a strategic objective.
Well, of course, this is all happening with what is a lame duck president in the U.S. And Wendy, I'll come back to you on this. When you think about the two different campaigns right now, we're focused a lot on the politics, on the fundraising. But when it comes to the actual policies, specifically geopolitical policies and how to deal with Israel, I mean, what are we hearing from the Harris camp? What are we hearing from the Trump camp?
Well, this is a tricky position for Kamala Harris right now because Joe Biden is still president of the United States. Kamala Harris is his vice president. And so while she may say things to Netanyahu as she did last week in private, in public, she must show a united front with the president. We believe that the United States' position on this is going to be to defend Israel against attacks, but they are discomfited, to say the least, with the notion of the ceasefire talks continuing. We had Defense Secretary Lloyd Austin telling reporters in Manila that they were really going to work to keep this from becoming a wider-ranging conflict. Indications are, although remember she's only been the nominee for a week and a half, indications are that Harris, at least reading the political tea leaves, will move slightly away from the full bear hug of Netanyahu that the Biden administration has continued to give. But it will be a matter of degrees, we believe. But she hasn't said anything about these events publicly yet.
All right, Bloomberg's Wendy Benjaminson in D.C. and Bobby Ghosh on set with us in New York. Thank you. This is Bloomberg. All right, let's get a check on these markets because they are flying right now. The S&P 500 extending gains up 1.5%. The Nasdaq 100 even more so, up 2.6%. That comes back to NVIDIA. Shares absolutely soaring right now, up nearly 20%. You can see that really giving a lift to the broader market as well, Sonali.
And coming up, as competition in the soda space bubbles up, we're going to speak with Ben Goodwin. He's the CEO of Olipop. Stick with us. That conversation is next. This is Bloomberg. We're putting the spotlight today on the soda wars as competition bubbles up across the industry. We're going to get to Bloomberg's Abigail Doolittle for a closer look.
Well, when we think of soda, Sonali, of course, we think of Coca-Cola and Pepsi, and it's a tale of two stories, really, relative to the recent quarters. Coca-Cola put up a decent quarter, a good quarter, beating second quarter earnings. They also raised their full year outlook, and I believe there was some nice pricing power there. Pepsi, on the other hand, their sales did disappoint. This as U.S. consumers seem to cut back on that particular brand. And then there's, of course, Olipop, the private company. They've had the good fortune recently of raising over $40 million in investment capital, and they are in more than 30 retail locations, including Walmart. Just looking through some of the notes here, very exciting. But when we bring it back to some of the publicly traded companies, it really illustrates the idea of what you were talking about, the soda wars. This is a year-to-date chart. In white or in red, we're looking at the S&P 500 as the benchmark. Then in white, Coca-Cola, the company that outperformed. In orange, the overall soda, food, beverage, tobacco index. And then in blue, PepsiCo, they, of course, again, their sales disappointed. So this really points again to that idea of the soda wars that we're seeing right now, Katie.
All right, Abigail Doolittle, great setup. Appreciate that. And let's get more now on this highly competitive space with Ben Goodwin. He is the CEO of Olipop. It's a beverage company, of course, set to hit about $500 million in sales this year. And as we heard from Abigail, you're in dozens of retail locations at this point. And I'm curious who you're taking shelf space from. Are you taking it from big soda or another category?
Yeah, so we're in about 35,000 retail doors now nationally, and it's definitely been a rocket ship for us. We've grown triple digits every year. In fact, one year we nearly grew quadruple digits. So that's been exciting to manage. There's a lot of pulling consumers into the functional category, which is obviously typically a trade up in price. And I'd say somewhere in the 60 percentage points, it's kind of that incremental purchasing. But then in the kind of mid 30 percentage points, we are actually seeing a lot of pulling from other categories. Some of that is things you might expect that are already somewhat in the health sector, like a sparkling water or maybe a kombucha or another functional beverage. But we are also pulling share from traditional soda, and it's kind of all the three big players you would expect.
Or also, traditional wine drinkers. If you think about it, you're buying a 12-pack really of Olipop for almost $36. You have a premium price point here. How far does that go at the end of the day? Does that work for you?
You know, it really can. Red Bull is a $10 billion plus business that has been consistently charging north of $249 since its inception 40 years ago. They just grew 10% last year. They're making a great run for it. I think at the end of the day, the higher price point has to be correlative with the perception of value. And consumers are obviously seeing that value because with Olipop, they're able to have the traditional soda experience that they love and has a lot of nostalgia for them, but they're trading out the high sugar. We have 2 to 5 grams instead of 40 for a typical soda. And then they're also getting the added benefit of research-backed fiber and prebiotics. So that really, right now, they're seeing that equation is worth it for them.
Let's talk about demographics here, because you think about Gen Z, for example, we know that they're drinking less alcohol, for example. It seems like they are gravitating more towards these healthier alternatives. Does that help explain your growth? What does your demographic breakdown actually look like?
No, absolutely. I would say that, soda is a Big 10 category. So that means that we track against all generations, and, we certainly do well with older generations and millennials. We also over-index with Gen Z. And it's actually, and even Gen Alpha. And one of the things that's really satisfying about that and rewarding is traditional big soda, if you will, has seen about a 60% collapse in that younger demographic over the last 10 to 15 years. But our philosophy and our theory has always been Americans still love soda. They've just fallen out of love with the ingredients and are looking for something better. So we see an over-indexing with that younger generation, and it's perfect because we're basically setting this category and Olipop up to kind of be the third wave of soda. Traditional soda going all the way back to the 1980s, diet soda in the 1980s, and now functional soda led by Olipop. And this new generation is really the one spearheading that into the future.
Ben, we've reported, of course, that you are on track to hit $500 million in sales this year. You're now profitable. What is your end game? Do you want to be owned by one of these larger beverage companies, a Coke or a Pepsi? Or do you plan to go it alone? Do you think an IPO is in your path?
Right now we're actually keeping all those options on the table. The triple-digit growth and the profitable operating that I mentioned earlier has kept us actually quite busy. The other nice thing about that is it actually generates a lot of options. But for us right now, our focus is full hands on deck. Let's keep seeing how big this thing can get. Still have a lot of brand to build and a lot of channels to go after. That's the focus right now. I can say that wherever Olipop ends up, it will always be in a place that we think can maximize the outcome for the business, but can also really continue to help us pursue the mission. We want to make sure that this is a product that's available and a brand that's available at a really high level of quality for decades to come.
All right, so we'll keep in touch with you on that one, but appreciate the clarification. You're focused on the mission right now. I actually want to go back to the price point because, like Sonali mentioned, of course, $35, I think, for a 12-pack.
You could buy a bottle of wine.
There you go. And, you think about the consumer right now. We talk about it on this show all the time, that pinched consumer. And this is a premium product. Do you have a plan to bring prices down, or how are you thinking about your pricing strategy right now?
Yeah, certainly that's something we could look at for the future. Transparently, that's not something we're considering right now. You can purchase the full $35 12-pack off the website, but that is actually, honestly, probably the most expensive way to interact with the product. Many of our consumers are going into the stores and buying a couple of cans at a time, which helps to kind of manage the actual price structure. And actually, we're also launching multi-packs into stores at a accelerated rate right now, where there's also a slightly better pricing structure at a per can basis. And then there's a variety of different ways to find the product intermittently on promotion as well for people who want to try the product and figure out whether it's worth it for them to buy more regularly. But one of the other things that we have going for us is we've actually put a lot of research behind the product. We've got a great partnership with Purdue. We've done studies with them on the efficacy of the product, stability of the product, things of that nature. And that's opened up some really interesting doors for us in the world of insurance reimbursement. So right now, we partner with a number of different insurance reimbursement networks, and somewhere in the realm of 40 million Americans can actually get Olipop reimbursed against their insurance benefits. So for a customer who's motivated to try the product, they may actually want to check and see if their insurance offerings cover Olipop, and that's a format for us not only to make sure we're getting the product to people who really need it, but we're also working our best to increase accessibility.
Ben, we only have about a minute left here, but you were talking about the third wave of beverages here, healthier beverages. What is next for Olipop? What are you coming out with? Where are you going to find Olipop next?
So we've got really exciting partnerships coming up. We're basically, for us, we're trying to move into a lot of the different spaces where you will have traditionally seen big soda operate, and that's kind of the next step up in our evolution as a brand. There's new flavors coming. There's some more very cool IP relationships similar to what we did with our Barbie collaboration into the future, and there's a lot of pretty significant accounts coming on board that's going to even increase our accessibility even more. So more Olipop, more flavors. We're looking really forward to being available for more Americans all over the country.
Ben, we thank you so much. That is Olipop CEO Ben Goodwin. Now we're going to get a check on the markets here with Bloomberg's Abigail Doolittle. Abby.
Well, it's hard to believe, Sonali, but we are, of course, at the end of July. So let's take a look at the NASDAQ 100 on the month. Now, the S&P 500 on today's rally has turned into the green on the month, but not so much for big tech because it's been a bit rough month for big tech. The NASDAQ 100 right now down 2.4% in the month of July. As for some of the big movers beneath the surface, and these are for the S&P 500, just so that we can take a look at some of the percentage gainers, clearly not big tech. Mohawk Industries, the flooring company, up 43%. From a percentage standpoint, this is the best company in the S&P 500 in the month of July. They put up a better quarter and guide. Stanley Black & Decker up 33%. It's interesting to see both of these in sort of the related area of construction, fixing up, that sort of thing. They also put up a better than expected quarter and the better guide as well there. As to the downside, Micron down 16.2% in the month of July. Not so great at all. They guided higher than the expectation, but it wasn't enough given the fact that into that quarter, the stock had been up 80%. And then NVIDIA is super interesting. On the day, up about 10%. On the month, down 7%. Yesterday, closing at 103 thereabouts. We've been talking about how if below 118, it could go sub 100. The question is 103 sub 100 or not? We're taking a look now at the monthly chart. We were looking at the daily chart earlier when talking about sub 100, and it could still go there. Take a look at this uptrend for NVIDIA. These are monthly candles. You cannot see the gap, but there's a gap around $90 or so on one of the big beat and boost quarters earlier this year. Those gaps tend to fill. When we take a look at these candles, it does look like we are going to see NVIDIA go back down toward that uptrend. This is the same uptrend right around 90 thereabouts. And then you can see the monthly RSI, that movement, it is heading down. That signals momentum coming out. And then finally, Katie, take a look at the yellow line. That's the 200-month moving average. That is at $9.60. That is how extended this stock is right now at 115. At some point, when they don't put up a perfect quarter and a perfect guide, it could be pretty painful. Whether or not that comes in August, we don't know. But this chart still suggests that there could be some serious consolidation ahead. It may not be immediately, though.
Yeah, I was just looking at it. NVIDIA doesn't report until August 28th, so unfortunately we have quite a while to wait there. Bloomberg's Abigail Doolittle, thank you so much. Now coming up, a string of security deals have deepened U.S.-Japan military links. Up next, we'll hear from Washington's top envoy to Japan, Rahm Emanuel. That's next. This is Bloomberg. U.S. Ambassador to Japan, Rahm Emanuel, says that China is cheating its way to leadership. He spoke to Wall Street Week host David Weston at the Aspen Economic Strategy Group's annual meeting.
A lot of times we think China's on the ascent. They got the fact is, in the last 3 years, and I don't mean to just dub this but during President Biden's tenure, when you look at where we were 3 years ago, China has gone from on top of their tippy toes to back on their heels. You look at, just take the political side, building this lattice-like work on the strategic side as well on the diplomatic side with Korea and Japan and the United States and the Philippines, what we're doing with AUKUS, with UK, Australia, the United States. China's has their whole script is to isolate country Philippines, isolate country Japan. The script's been flipped, and the isolated party is China. And they are now on their back heel. They're also economically, I don't mean to say this, but if I could, I just hope the PRC leadership stays on their strategy economically. It's working unbelievably well for us because they have an incredible problem now when you look at everything that's going on in the country domestically. You look at their cities, municipalities, you look at their belt and roads, all of it is running a massive economic problem for them. And and it's a deterrent. And they know anything they do strategically has an impact. The thing that we haven't done, this is true in conflict with China and Russia, they operate, you can see like Russia, they're doing it in Europe, these kind of what's called gray zone. It's not kinetic, but it's just enough to throw you off. China's doing that. We kind of have a black and white, and we don't operate there in that kind of gray area that throws the opposition off. But China right now is the odd man out in the Indo-Pacific. You can look at it on any level, and a lot of what has been put together in the last 3 years has made China the isolated party, not allow China to isolate country A.
Do you see a path forward to a world in which we engage with China economically? We don't just isolate them. That's unrealistic given their size. But do not enable them. Because it feels like the United States is going back and forth.
Nobody would ever look at this and say, this is a diplomat. So where deterrence ends and provocation begins, I don't know. And nobody knows. It's more art than it is science. You can have engagement. So here's just a short. I thought it was the right strategy when you look at equities, where China was, better to have them in the tent than out. What the mistake was in 2012, basically when President Xi comes to power, they went from thinking of America and the West as strategic competitors to strategic adversaries. We held on to strategic competitors a decade too long. Now we're accelerating, realizing this is different. You can't have a system where somebody's part of it, where intellectual property theft is a norm. It's just too volatile to a system based on trust and law. Look, they're stealing stuff from Google. That's now a case. They're stealing stuff from ASML, and I'll take one case. ASML makes the semiconductor laser technology. Tokyo Electron is a big competitor. Nikon's a big competitor. They compete. They out-innovate. They don't steal from each other. But China is stealing, and they've been caught stealing. You can't have an international system. So can we have? Sure, you can trade, but you can't steal. You can't cheat. Okay, and you can't subsidize your private sector to the point that their whole strategy is to crush the opposition. That's a different economic model to the point that it's destructive. You can have your own economic model of socialism, if that's what the country wants to do, but stealing, cheating your way to leadership, you can't have a system that in the end of the day is law and trust. And so I don't know, you're not going to cut them off and have two parallel systems. But if there's going to be integration, there has to be an acceptable norm.
But you talk about deterrence.
Yes.
By definition, that's getting someone to change their behavior. Has the United States...
Well, it's interesting.
Have we ever changed China's behavior in any regard?
Yes.
With the WTO, we thought that would change the behavior. Did it really?
No, what we thought was that they would be vested interests. I'm not sure change behavior. I think deterrence is to make somebody think twice. What is the... Look, in politics, you're sitting in a room, whether I was mayor or chief of staff to the president, you're weighing the equities. If it's 100 and 0, you don't need judgment. It's when it's 51 to 49 that you need judgment. And deterrence is making people evaluate the equities versus the losses and think twice before they do something that becomes provocative or upsets. And so that's how I think of deterrence. And I think, I do think China's domestic economics is a deterrent. And they have made more decisions that have been more of a deterrent to them economically than kind of our own impact of some of the things that we've done. We've added on to that. But I think the mistakes China has made have had real consequences at home.
And that was U.S. Ambassador to Japan, Rahm Emanuel, speaking with Wall Street Week host David Weston. This is Bloomberg.
Shares of Meta rising today ahead of earnings. Mark Zuckerberg will justify heavy AI investments that he considers fundamental. Now, will investors think so too? Bloomberg Intelligence senior analyst Mandeep Singh is here to discuss. Of course, we know that in this earnings cycle, more investors have been more discerning about that CapEx spend behind AI. Meta still on the rise today, despite what you saw from Microsoft. What do you expect?
Well, so the key is what are they going to do in terms of their CapEx guide? I think everyone expects it to go up, but also what they say around monetization, because Meta is one of the 3 companies that has its own large language model, and they have open sourced it. Now, in the case of Microsoft, everyone knows that they are able to monetize AI through the cloud infrastructure. They called, a $5 billion run rate business that didn't exist last year, and also the copilots. In the case of Meta, we don't know how they're going to monetize. It will show up in the ad pricing and sales, but beyond that, we don't know how they'll monetize.
And you think about where the stock sits right now. I mean, the year of efficiency really delivered in terms of performance. And I mean, it's just interesting that we're talking about CapEx, and investors are so focused on CapEx. And that's after they really rewarded that discipline in the past.
Yeah, and in the case of Meta, it's the CapEx that goes to Reality Labs and then the AI side of it. So AI CapEx is perceived as a good CapEx, Reality Labs not so much. Although, to give them full credit, they have seen some traction with their Ray-Ban AR glasses. I just don't see a path to monetizing it in the same way they do it on the ad side.
Based on what we've seen so far out of this season, what do you expect in terms of advertising here? How does the market even look when you think about Meta's place in it?
So, to me, the key is Amazon here. And I know a lot of people will be surprised because Amazon's ad business is the fastest growing ads business. You know, they're a $50 billion run rate, grew 25%. Meta was similar last quarter. But the fact that Pinterest guided lower, it tells me that Amazon is having a real impact on the digital ad side. And it'll be interesting to see if Meta says something along those lines.
And of course, you cover it all. So I'm actually going to ask you about Uber right now. Uber obviously in the news today, both for what's going on in NYC, but also earlier this morning, the headline that Uber is partnering with BYD for 100,000 EVs. I mean, what did you make of that?
I mean, the biggest risk for Uber is the robotaxi rollout, the fact that Tesla hasn't included them in the plans. They are partnering with whoever they can in terms of getting the vehicles. Now, BYD is more EVs. I don't think their software is as good, to kind of propel them in the robotaxi arena. But clearly, they are doing very well in terms of the installed base of EVs outside the U.S. And that's why I think they are early to partner.
Yeah, and you can see Uber shares rising today. Mandeep Singh, you're going to have a very busy day, very busy week. We appreciate you taking the time with us now. That is Bloomberg Intelligence analyst Mandeep Singh. Now, coming up on Open Interest tomorrow, we have Megan Horniman of Verdance Capital Advisors, Tom Forte of the Maxim Group, and Anastasia Amoroso of iCapital. Of course, we're going to be unpacking what we learned from the Fed today and also what we hear from Meta and Qualcomm after the bell tonight as well. This is Bloomberg.